The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
I think we got the audio now. Hope you guys are having a good Tuesday morning. You know, you'd think we'd had some action on the S&Ps based on some of the things going on yesterday. Trump talking about the TPP and all kinds of other newfangled things that might be happening with the U.S. government and the slant on things. But lo and behold, we are still in a tight range. So the trade is still by volatility. The more this thing kind of hovers around, just the more longest new spike ups it's looking to me. So, but you never can tell, and that's what options are for. Let's take a look at some of the other things. The dollar. If Trump has his way, and I don't know how much the rest of the Republicans are going to go along with this, but I think he'd rather see the dollar down in the low 80s area instead of the 100 area. But let's take a look at gold, see where we're at here. You'd also think gold would react a little bit. Let's just take a look at the dollar first. I'm sorry, got ahead of ourselves. So the continuous on the dollar, we're starting to, and yesterday we came into, there's that 99.95, and here's the 99.63. We talked about, just waiting patiently until we got down here. I still think we're due a pretty serious technical bounce on the dollar. So we got close to that area. We reached a low yesterday, I believe, of 99.88. So got very, very close to it. It bounced up. Not too much, but I feel like you're in an area down here on the dollar. You can play some defense, and if the dollar rallies by default, the golds of the world could start coming off. So I think you're at a nice precipice of resistance on gold and support on the dollar. So I like this trade a lot. I think we're due not just kind of an intraday trading bounce here. I think we're due kind of a long-term change in tone on the dollar. Kind of, okay, we've reached some pretty significant highs before, and we're coming back down into an area that we could see a decent bounce, and we could see a couple hundred pips bounce here. So the golds of the world could come down into, let's see here, where's our targets? I actually think we could see 1177 off of a pullback off the 1211 general area. So trying to sell this if we can get back down below 1211, 1209, 1210, especially a daily close below there. That would be pretty significant. So, what we're always looking for on this type of trade is to, kind of reverse back into the profile, put a stake in the ground, get a close, use that area 1210, 1211, stops above, and try to figure out if we can explore the whole fair auction down in 1177. So it's not a super deep analysis type situation. It's just you've got a couple of things lining up in your favor for a trade like that, and it's not a bad situation. So crude, I love how this thing's acting. I like, this is the March contract, stops below 52.32 and 52.24. Why? Because we're kind of at the bottom of a range on the daily and still trading above weeklies. And I think gold's got a really good chance, crude's got a chance to move higher, but you got to pay attention to the dollar rally, possibly off of these lows around 99, $99.60 to $99.90. But again, if the dollar rallies pretty good and gold and crude kind of still spins around here above 52.32, that's going to be even more bullish for crude in general. Let's take a look at the VIX. We are sinking to lower numbers. Amazing. Still think that's the volatility play of all times. Let's take a look at the NASDAQ really quick here. As we look at this, the NASDAQ, a little bit better looking situation on the long side than the S&Ps. Here's what happened yesterday. We kind of dipped in and then closed above on our daily profiles. This could lead the broad market higher. Let's take a look at a couple of things in the NASDAQ right now. Apple, for instance. So as we look at Apple, I've stayed away from this on the long side. Just you guys kind of been watching this. 117.86. If we get any pullbacks, but right now it's still kind of okay to be long, not okay to be short Apple until we get a close back in below 120. Shanghai, I hate falling in love with something, but I love this trade. I think we're going to ease higher, 34, 33, 35, 21. Keep your eye on that. Let's take a look at a couple other things. Let's take a look at the Nikkei continuous. We're going to look at the yen in a little bit, but here's the Nikkei. We talked about this coming back off of this 19,680. That's happened. Talked about that a couple of weeks ago. Talked about targets down below initially right here. So what do you do with the Nikkei now? We've had a profile edge down for the first time in a while in the Nikkei on the dailies. I think and let's go back into the currency server here really quick before we talk about that. Here's the yen trade. Just like the dollar getting down into that support, the yen's kind of gotten close to this area. So, the yen rallying, becoming devalued, in my opinion, would bode well for the Nikkei here. And I think you could trade this Nikkei futures trade off of this 18,893 on the long side with stops below there. Got close to it yesterday, kind of rattled around down here in that inflection point area, and it looks like we're kind of reversing back above. So I think the Nikkei trade is actually good from the long side right now. Silver, just nothing happening there. And we talked about the financials quite a bit lately. Let's take a look at the XLF. Talked about this coming off these 2387s up here. And, what do you do with it now? A little bit of a scarier trade here, but we're down into some areas now on the daily, looking at 2294. But let's take a look at some of the internals before we make a decision on the XLF. JP Morgan, we talked about this coming down into the 8273. We're going to take a look at a couple more internals of the XLF. We're going to look at the scanner, then we're going to go back to the XLF, make a call on that.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Somebody in the den was asking me privately about yen futures versus yen dollar cross on the spot currencies. And I've got it at McDonald's. I have no idea why I did that. Let's see. Let me go up to the yen US dollar cross here. So there was kind of a mixed message based on looking at, what is that, 6J? Is that the yen futures? I think it is. I'll pull that up in a second. But, the yen futures, I know it's obviously a completely arbitrageable event relative to the dollar-yen cross. That's what it's kind of mapping and following against. We take eSignal's got a pretty. We're using eSignal data, interactive data. I just paid a massive bill with them, so I'm very aware that we are using eSignal's data. God, it's amazing sometimes how those exchange fees creep up on you. Ooh. We do a volume at price on most things, especially when it comes to the futures. And we do time at price on these currencies. And the eSignal gives a pretty good kind of aggregation of currency data out there, in my opinion. In fact, they charge, if you got eSignal, they charge, I think, an extra $50 for that aggregate currency spot view. And they've got quite a few things piped into that to kind of give this aggregate view. So, and the currency futures, in my opinion, a lot more people should trade those, but it doesn't have the participation that I'd like to see, kind of stepping back and looking at it relative to what, we're able to analyze with the currency spot situation. So I'm kind of more leaning partially towards these spot currencies based on the data that we're able to kind of get our head wrapped around, and also relative to what's probably not coming through on the futures relationships to these spot currencies, i.e. the 6J, I believe, on the CME. So that's why I pretty much primarily show these spot currencies. And the yen right now, in my opinion, as we've talked about previously, sorry to beat this to death, we talked about this back the truck up area around this neighborhood of 111.67, 68, and that was kind of cool because the dollar also had kind of come into that area on the futures side on the continuous contract around that kind of inflection point around 99.63 to 99.90 and some change. What was it down here? That one, 99.95. So that's the take on that. God, I tell you, man, these S&Ps are amazing right now. Let's take a look at McDonald's. David, I don't know if that was meant for me on the Xignite Global Historical. But I tell you what, we use Xignite data. David White was, I don't know if that message was for me. We use Xignite data for some things we're doing. And let's see. Does not currently support reverse splits, only forward splits. Fortunately, this corporate action type will be supported in the new version of X Global Historical, which is targeted for release later this year. There is, can only be supported by the API. Actually, I want to get my head together before I talk about that after the next break, because they do offer a service over there. God, did they? Yeah, we'll talk about that after next break. Let me finish some of the usual suspects here because I want to make a comment on that. Okay, so looking at the 10-year, here's where we're at. I mean, yesterday we obviously kind of rallied off of that 124.0506. I talked about possibly we might reach into this 125.0809 at some point. It looks like we're just churning around here. I don't see any leverage on the 10-year to trade it one way or the other. So we're going to kind of leave that alone right now. The 30-year, we really caught a good bounce off 149 off this, and we talked about reaching this area ultimately, which it did, 154. And again, you know, we're just kind of petering around down here, really not showing a lot of direction. I don't think there's any real good edge there to trade that particular product right now. We looked at the utilities recently, and they kind of did their thing, got up into some targets up top. I still think 48.12 could be attained on the utilities there. We're going to take a look at another stock that was in the news, Halliburton. Let's see here. So it looks like we don't have any prints going off right now, but definitely had some action yesterday. So here's Halliburton. You know, do you go long or go short or leave this alone? I actually like the oil sector right now, and I like crude, how it's acting. So I wouldn't be opposed to actually trying to catch some of this with stops below 53.21 on Halliburton. Let's take a look at Yahoo. Looks like real prints here, 43.81. So that's kind of interesting. If you're, this is our weekly view on Yahoo. Let me make sure. This is our daily view. So we had 41.80 unfair highs on the daily and 41.83 on the weekly as it was kind of spinning around up here, consolidating after a decent move up off previous unfair highs around, and you've got all this in the scanner, by the way. So now we're trading up about in here. Do you chase this? the real good basing type action has already happened. Now we've gotten the pop. And if you're not already in this, I don't really see any reason to take this off right now. If you've kind of used this technology to base a long trade, it was kind of okay to be long, not okay to be short. That's the way you should have been looking at Yahoo. But as of right now, I don't see any reason to take this particular trade off. We're going to take a look at McDonald's in the ever-present going north Tesla. So we talked about this one, really no reason at all to try to get short this particular product. Still the case. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Let's take a look at Yahoo. Wrong symbol. Let's take a look at Yahoo. If I can type this in right. We were finishing up here before the break. This is, again, talked about no reason to really take this off at this stage. If you're using a scanner, this is in the scanner, you'll have some new information coming out here as the stock continues to move today. So that would be some framework to look at. We were talking about Tesla at the end there too. Try not to think it's gone too high. I mean, there was a guy that called in. This is a great example of just not having any reason at all to really short the thing, in my opinion. Is somebody on with us? Oh, I don't know whose voice that was. Maybe it was a ghost.
I'm on.
Who's on?
This is Larry Pesavento, Tucson, Arizona.
Hey, Larry. How are you?
Hi, John. How are you?
Good. Nobody alerted me that you were coming on. Good to hear your voice.
Secondary, whatever they call it. Anyway, listen, you were talking about the futures and the foreign exchange.
Mm-hmm.
And I have some information here that might help our folks. We started trading foreign exchange futures at the Merc in 1972. That was when Leo Malamed and my good friend Byron Tucker developed those 6 major cross rates. And the problem is the foreign exchange market was not available to us until about 15 years ago or so. You had to have $1 million account to actually trade foreign exchange, and then these smaller firms came in. And what they do is they don't charge a commission, they charge a pip spread. And the pip spread, like on the euro for most people, is like 1 or 2 pips. If you trade small size, it's going to be 2 pips. If you trade a big size, like 20 to 50 contracts or more, you can get a half a pip. But if you trade the futures at the CME, which are less than 1% of the Forex market, believe me, less of 1% is huge. I mean, this is a huge market in foreign exchange. So if you're trading small size, 10 contracts or less, the futures in the CME are really good. There's 2 problems. One is, let me explain to you why it's good. I don't want to take all this time, but
let's keep talking. This is great.
Okay, if you trade at the CME, most of the brokerage firms charge around $4 or $5 round turn. Okay, if you trade a pip spread, 1 or say 2 pips, you're looking at a $20 commission. So you $20 or $4. Let me see which one would be best. I think I'd rather pay $4 because if you trade it every day, you'd be saving $800 a month just in commission cost. But the euro, the pound, the yen, the Canadian, the Australian, they trade really good. But two things are wrong. One is they don't trade 24 hours a day, 5.5 days a week. They close for an hour or 2 at the end of the day where they do settlements, and you're not protected during that time. So if you're just day trading and stuff, it's a great way, to do it. But if you're position trading longer term, that's okay too. But you have to realize that there's a time period when the market's closing, you're not actually protected. But if you're in and out, in like on a 15-minute or 30-minute chart, there should be no problem.
Yeah, there's been so many pushes. I mean, Larry, in my opinion, especially when I was in Chicago, for people to just kind of convert over to trading the currency futures more so. But it never seems to totally get, where they want it to be as far as
it's a marketing thing, and not only that, people are accustomed to doing their own thing. And the third thing, which is the most important, is the foreign exchange markets. The head of this is all in London, so.
Right.
Chicago's playing second fiddle to London on that, but they do a pretty good job with the volume and everything. And of course, they have an open interest that you can follow, which you can't follow open interest in the forex markets. And also the volume in the forex markets, you never really know, how much volume's being done, other than it's a whole lot. So those are just a few of the things. But for shorter term trading, I think it's really good. And if you're not worried about that 1.5 hour period where it's closed, there should be no problem.
No, I agree. And it is, if you look at it, like you said earlier, Larry, if you look at it from a cost standpoint and what you're controlling and, what is it, like you said, $4 round turn, something like that, versus the pip spread. And like you said, trying to get off volume or not volume, it really is in your favor to look at trading currency futures. I agree with you.
Okay, John, I'll let you go. You're doing a great job, and I'll talk to you soon, okay?
Great. Thanks, Larry. Thanks for calling in.
You bet. Bye-bye.
Sorry I didn't see your message on there.
Oh, that's okay.
So, okay.
Pleasure waiting for you. Bye-bye.
Okay, thanks. I think my Yahoo Messenger's maybe not working correctly this morning, so I apologize for Larry not seeing that. Yeah, so there's been so many pushes,
John.
marketing-wise to. Do we have another caller?
John, can you hear me, John?
Yes.
Good morning, man.
Hey, I apologize. I'm not. For some reason, my Yahoo Messenger on the alert system on TFNN is not notifying me. I'm typing in, but maybe I'm not receiving messages. So, Dave, I apologize for not knowing you were on the phone.
No, it's all good.
Okay.
Tom and I were texting back and forth. He says there's a cup he wants you to urinate in. He's going to run some tests here in a few minutes.
Okay, all right.
Okay.
He's not the only one that requests that.
Party on your own time. This is TFNN time. What you do in your trips out to Colorado is your business, John. But when you're in the saddle here, man.
Hey, it's legal out there.
Yeah. Oh, yeah,
Okay.
Sure. So therefore, it's good for you. But anyways, I was on when the same time Larry was, but I said something, and then Larry said something like, "Ooh, he takes precedence over any nonsense I want to talk about." So yeah, no, that was awesome. There's never a time, at least in my experience, where I was chatted with Larry where you can't get some great history lesson or something you didn't know before. The guy is just a walking encyclopedia of trading knowledge.
Oh no, without question. So what's on your mind, Dave?
Dated myself with that one, right? Encyclopedia. 20-some generation going, what's that, man? Encyclopedia, what's that? But anyways, I was wondering if you could take a look at stock I can't find in the scanner. It's called Watka, symbol WSO.
WSO?
Yeah, W like William, S like Sam, O like October.
WSO.
That's the symbol.
Watsco, yeah. All right.
Can you find profiles on that? Because I can't find that in the scanner.
Yeah, I wish we could do everything in that scanner, but we can't crunch all those numbers, so we just picked as many usual suspects as we can. If you want it in there, we can put it in there as a special case. But WSO on the weekly, showing it trading around 150.27. I don't know if you're seeing this on my screen right now. Can you hang on till after the break, Dave?
Yes, sir.
Okay, great. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Dave, you still there?
Yes, sir.
Great. I'm looking at the daily right now. What's your angle on this? So then maybe we can kind of do a reaction comment instead of an action comment here.
Well, this thing's been spiraling up for several years now. It's a great company to buy the stock and hold it. It's done very well, but I'm anticipating, for reasons that I won't go into, anticipate this thing kind of consolidating for a while. And I was looking for, in the scanner, I was looking to try and pull it up so I could look at, see what kind of profiles, to try and play, consolidation. Sell it at the high, the unfair high, buy it at the unfair low. As looking at it from that point of view. So then when I tried to pull it up the scanner, I couldn't see it. I'm like, well, I know someone who might be able to pull it up, and his name is John Logan. And, if you can put the pipe down and take my call, then, we can take a look at it. So that's what I was thinking.
I'll put the crack pipe down, and we're going to talk about this now.
Excellent. Thank you, John.
Good. Okay. So really the only numbers, you're right. Just a blind man could see this one. It's just been, really only at certain instances has it even had any technical damage. And then let's go back into February last year when, we had a kind of a profile edge down on the weekly, and then, we kind of got back in it and came back and retested it. Those are very powerful trades. In that particular week, it actually just blew all the way above the weekly profile there I'm showing. But, this is kind of one of those things, maybe in the old days I had, oh, wow, this thing's gone so high, and then it's had this kind of key reversal up top here. But all we've done really is kind of gone back into a balanced area that's edged higher. So it's something I think you're probably better off maybe just trading this only from the long side and when it's presented to you. So like we kind of got back up in the daily profiles above 147, and then I'd be looking to trade breakouts, again, trying to block out the short side just because that long-term trend is still up, in my opinion, even though we kind of had that key reversal. It's just wanting to really consolidate in the latest long-term balanced area. I'd be looking to trade breakouts above 150 and a half, or buy support at 143 and a half or 147. I wouldn't be playing around with this from the short side ever, just because you always want to try to, that trend is your friend thing, and then try to use that as that overhanging biased opinion to trade around these inflection points. So I wouldn't be looking to short at 150 and a half right now. I'd be looking to trade breakouts and closes above there, buy support at 147, or take some off at 154.21. That's really it.
Gotcha. Can I ask you another question?
Sure.
How big a deal is it to get that symbol added into the scanner? Is that like a big expensive deal to do, or not?
No. Literally, if you want that in there, I'm writing it down right now, and I will just tell a couple of guys to just put that in. It's no big deal. It'll show up in the other section. I'm going to go into the scanner right now and go into instruments and pull this down, and it will like if I click off the S&Ps there and choose other, it will show up in this area right here
under the S&P.
It'll in this little area called this pull down. It says instruments. It'll be within this other this section called other, literally.
Okay.
But we'll get it in there. I just took a note, and it'll be in there today. Another thing, I hope Larry's still listening. You might get some kind of kick out of this, Dave, based on Larry was talking about the currency futures before, and really the value of trading them. the Merc is really, and the board. Actually, this was the board of trade back then. They come out with products, and they really spend money on marketing them at times, and sometimes they're complete failures. And I don't know if Larry remembers this, and I don't think this product is still traded. If it is, I'd be amazed. They came out with something. Pete Stottlemyre came out with this. It was something called X funds. I don't know if you've heard of that.
No, it's a new one on me.
Maybe if Larry is listening, he could call in about that again, because it was something that Stottlemyre came out with. It was kind of a rotating, different basket of commodities that kind of had this revolving door of what was going to be in there at times and what wasn't. And I remember a guy named Paul Fisher. I don't know if Larry knows him. He was kind of Pete Stottlemyre's assistant for a long time. And I was talking to Paul about that, and he goes, "Yeah, they've tried to push this, and I'm like the only guy in the pit, and I just stand there all day long, and nothing ever trades." And they've come out with some different things at times that haven't really been successes. And maybe Larry's got a good story about that if he knows about it. Maybe he'll call back in.
When I first started trading currencies, I did it on the futures, but what ended up getting me over to Forex, because Larry is absolutely right. The beautiful thing about futures is you can get volume data, you can get open interest data, which, especially on the longer term trades, setups, it's for me personally, and what I've been taught, that's valuable information, to say the least. But what ended up causing me to get switched over to Forex, and I still go back to, like when I'm trading euro or whatever, I will still look at the Merc, what the open interest is and what the volume is, just as kind of a guide. But with the Forex, you can trade these crazy cross pairs. You know what I mean? It's everything under the sun, versus the futures. It's just the large economy cross pairs. But if I could ask you one last question, I promise that I'll stop wasting your time. And thank you so much for putting Watsco in the scanner, man. I really appreciate it. Thank you very much.
No problem.
You had mentioned last week when we were having discussions about my hometown and the freak zone that it is, and I got a good kick out of that one, by the way. I used that with my dad. I was talking with this guy, and he says he likes the West Coast because there's more normal people, and he busts about laughing. He's like, tell him I agree. So, because for me, I don't know, when you grow up there, you think that's normal. Everybody, lives in $1 million houses and drives Ferraris. You think that's normal, or not normal, but you don't think it's that big of a deal. True. But anyways, the question I got for you is, I got a buddy of mine. I'm trying to flip him over, and to the scanner and the profiles, and I'm kind of working with them, teaching them some things. And you'd mentioned last week when I was in Daytona about there's an upgrade coming, and I wasn't able to see it because the internet at the hotel dropped my laptop. So by the time I got clued back in or logged back on, it had passed. But if I understood it correctly, there's a service coming where it gives you a buy point, a stop, and it pretty much spoons it to you, kind of like what you have with the trade stop, but only for stocks. If I understood that correctly, when did you say that was coming? Did you say like in a week or two? Did I understand that correctly?
Well, we were trying to get that version out a while back, but we're supposed to have a beta out this week. And I've been saying that for a while, but literally I put a hard stop on that to get out this week. I'll talk about that a little bit more after the break, Dave, but thanks for coming in. I'll discuss that a little bit more after the break.
Thanks, John. I appreciate it, buddy.
Thank you. Okay. Be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I was talking earlier, Pete Stottlemyre created these X funds, and you could read about it. I don't think they trade anymore. Pretty sure they don't. But it was a good concept. Nobody ever traded it. It was kind of a revolving door. I mean, quite a few articles on it and what the definition of it is. Can't believe I remembered that. Anyway, and we were talking about the scanners and some additions. We're putting a beta component in the large scanner, which will kind of distill down even further some breakouts and things that are acting a certain way relative to the market. Again, being able to dial in a beta component to be able to hopefully find more choice opportunities relative to your own sorts or custom sorts. And we are putting WSO in there. And in the HTML5 version of a scanner that we're coming out is more heat map related with the pics on the screen, and hopefully we'll have a beta out this week. God, that has been a long time coming. Johnson & Johnson, this has been one we've really been kind of, and finally yesterday, we've been talking about on the short side, leaning on the short side, reached a low, looks like of 111.13 that's today. Okay, so this stock has now come down into and is sitting right around these unfair lows around 111.96. This is our weekly view on Johnson & Johnson. So do you pick this up right now? In my opinion, yes. You've got a trading opportunity here on Johnson & Johnson. We've kind of reversed back up this morning above 112. We're trading a little bit higher now. And Johnson & Johnson has completed that cycle that we talked about from 117 and 23 down into this area. So you should be taking off some shorts right now, and I don't think it's a bad idea to look at this, considering what the broad market is doing right now, and it's just tightening motion to possibly go higher. You've got a good opportunity on Johnson & Johnson. This is one we talked about too, General Electric, and this thing really came down significantly below where the bounce point was, 30.25. So not every trade we talk about is going to be a winner. This is just, again, showing you one that broke down here after a little bit of a resting period around 30.25. So that's what that looks like. We talked about Amazon too. We talked about, the situation here, 815.51, and talked about it possibly trailing down into 784.81 ultimately, but now we've got it. That chance to play defense has now been broken. We closed above 815, so this is one where it's kind of a stop out situation on Amazon as far as the short side goes. Okay, just to recap, we're going back to a couple of the bellwethers here. The S&Ps, nothing happening here. Non-directional trade more than likely in order. Gold, looking to have a daily close below 12.11. That would really be nice on that particular product. And the dollar's sitting, in my opinion, in an area where it can bounce. A little bit more downside possibly. 99.63 stops below there for a bounce opportunity that could coincide with gold coming off that 12.11 neighborhood. And I hear the music. Stay tuned for Larry, guys. He's up next, and all the posts on TFNN all day long. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.